The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, and my pleasure to be here. My pleasure to be here on this Wednesday, August the 29th. Kind of like a September day here, you know, we're running out of summer days. Oh, that is upsetting, but that's the way it is. So, thank you, Steve and Tom, for a great 2 hours introduction there, and I come on 11 o'clock till 12. And we've got shows right through the day, right up until 6 o'clock this evening Eastern Time, and Tom O'Brien wraps it up. And today you've got Ken Shreve, you've got, you've got Ken Shreve, and of course you've got Dave White. So this is going to be quite an exciting day today, and I'll explain exactly why right now. The Dow's down 15 at 13,087. The S&P is down 1.87. Now, it's all very well saying down. The fact is that there's been a kind of biding time the last few days. The Dow made a peak D at 13,330. That's in the ChapmanWave, methodology. When you go from the lowest, most obvious low bar, in this case I'm taking the low bar of the 2nd of August, and we merely count successively higher peaks until you get 4 peaks with capital letters to the upside. And that 13,330 level said, the highs that were unfolding, I would have to call them nominal new highs. The steepness and the quickness of the decline down to the up channel support line. Let me just do this. If you're looking at Tiger, I forgot to put that down. If you're looking at Tiger TV, you will see that green line is the support line. It's a technique that I use in my ChapmanWave CD, introducing the ChapmanWave methodology, whereby I identify the lowest rising low bars. It's the full bar with a wick. Sometimes you'll use the body, but usually I want 2 to 3 points of reference, rising trend line, and then I draw a parallel line above it. And that parallel line sometimes takes in exactly highs that were made to the upside. Then within that, I have a narrow little strip that I call the inside track. On the upside, in this case, it's the green and red line there. What was the modification that I've made over the many months? I'd say it's about 6 to 8 months now, maybe a little more, that I've been using my technique, is that instead of having just 2 parallel lines and the one is a dash line, I have the inside track on the upside as a red line. And that says every time the price of whatever you're following gets to that area, that's probably where it's going to be repelled, and it pulls back and it tries to bounce back into that area. It's exactly what's happened here. 2 peak Ds. One was a peak F, where it extended to 13,128, but it stopped right at that trend line. If it would break above it, it would go into the green area. The green line would say, hey, that is fabulous action, because now you've broken what was normally, and I don't mean just to break it and pull back, I mean to break and hold. You're breaking what was, up until now, serious resistance. So a green line flashes, and it says, you know what? That's very good action. On the downside, we're watching this real closely for my opening call subscribers. I was hoping to raise a little cash by either being stopped out with either a nice little profit or a tiny loss today, because I want you to. I'm hoping to build up a larger cash position over the coming few days, maybe even a week or two. My thinking is that there are a number of stocks that are actually now running into resistance on the upside that have been fabulous. There are stocks on the downside that are either going to break or they're going to have a very nice bounce. I want to be able to play those parameters, just as what we've done is in my opening call. That's my daily service that comes out every morning, starting at about 6:15, 6:30 in the morning. I start sending charts to my site called the opening call. These ChapmanWave charts, I show the charts from the Dow in great detail with hardly any technicals at all. That's this one right here, the white one. I'll just drag it up right there. And it shows very clearly what we're looking at. Nice printable format because it's with a white background. And I give commentary here. I add commentary later on. And it shows you exactly what we're looking. You can learn the Chapman Wave by studying these charts as I do them every single day. 120-minute charts, daily charts. I also include the weekly and the monthly. Now what's really important about this particular format right here is that you see that the red line, the 9-period exponential moving average, that has been strong resistance. It was, in fact, very nice because it was support all the way up to that peak D. Now, for 1, 2, 3, 4, 5, this is the 6th day so far during the day that it's been a repellent line. And that says that until the Dow can close about 13,130, let's call it 13,140, close there. We've got to look at that and have respect for that 9-period exponential moving average as resistance. But hey, wait a minute. This is very impressive that we are bumping into these levels. There should be more selling, and yet at the same time, from the 13,027, this is the Dow, 13,027 low of the 24th of August, that big full candle, which had a high of 13,175.51, and then a high of 13,176.17. I never noted that. That should have been a gray A. That's the technique I use. Let's make that gray. There it is. Gray A. And what does that say? That says, yes, there's an A, but it will fail and become an A minus if it takes out the low of 13,027. And that'll be that pattern I call the dreaded H. This is a very critical area because I'm looking at the way that the volatility index, the VIX index, is climbing. Did it make a new? Yeah, I went to a leg F today. It's $16.97. Now it's up 45 cents at $16.94. So that says that the volatility index is rising by 3 bears. The TLT, which is the Lehman iShares 20-year T-bond fund, is rising. It's making a peak A as we speak, but it's above the 9-period exponential moving average of 124.70. And you've got a squash between the stochastic, which is at 79.68%, almost at 80%, and the MACD crossing positive. That says be really careful right now, because if bonds start leg B up above 126.36, that's if there's no new high, recovery high today, that would inaugurate the potential for bonds to move higher, and correspondingly, we've got the peak D in the Dow already at 30,330. The S&P, so the Dow right now is at minus 14. The SPX, the S&P index, is at this particular point down 1.69. That's a nice relationship. That's I like that. Now, this here is a leg G to the upside, having tested the 14.15 previous high of May the 1st in the S&P. It went to, I didn't type that in, 1426.68. I'll just take 1 second here. 1426.68. Whoops, 68. And that's a peak G/C. But look, the stochastic's very poor at 44%, and the MACD is turning down. So what we've had the last few days is price moving higher without, well, let me put it this way, with prices holding in the upper level with a high-level consolidation as the technicals have been pulling back. That tells me we've got to be a little careful here, because if the S&P at 1407 starts to get to 1402, be careful, because the 1398.04 level of the 24th is going to be a target to the downside. If it cracks that and goes lower, we've got ourselves a sell signal to a sell mode in the S&P. Right now, it's just on a minor sell signal. Price is the arbiter of direction, and at this particular point, I don't have anything to say that is breaking down or breaking up. It's just in a very neutral position. Now let's jump over to, so that you have the volatility index rallying, not big, but rallying enough. The TLT rallying, not big, but enough. And now the other one is the dollar. DXY is this is the dollar index. Well, the dollar index is testing the low of 81.19 from the 19th of June, The low that it's been making lately, the low is 81.22 on the 23rd. That's higher. 81.26, that's higher yesterday. So this is very key because we've got a slight positive divergence between the stochastic, the MACD is attempting to turn up, and the histogram, those gray bars there, if you're looking at Tiger TV, are moving a little higher. So now let me cover this in more detail in terms of, I'm going to wait until Friday because then we'll be close to the weekly charts. I don't want to get too deeply into the weekly charts just yet, other than to talk about the Qs. The QQQ series made a high of 68.88 on the 21st of August. There was a pullback to the 9-period exponential moving average. Intraday under it, above it again. That level is now at, I'd call it, it's about 68.08. Well, today's another, so far, kind of an inside day to yesterday. Hey, the day's not even two hours into it. This, I'll tell you the parameters. The MACD so far is tipping down, crossing negative. The stochastic's at 77%. But my weekly charts on the Dow and the S&P are still good. The weekly chart on the Qs is still very high, 94% in the stochastic. MACD is positive, not great, but positive. And the monthly chart is at 78% if by Friday afternoon at 4 o'clock, the Qs are able to get to 69.35-ish, somewhere around there. There's a really good chance that the stochastic in the monthly chart will go to 80% or higher. That implies that if there's a failure between now and Friday at 4 o'clock, the S&P cracks the levels and the Dow cracks the levels that I was talking about before as support, and the Qs start to turn down. I don't know if they will actually crack the low of 67.60, break it on the downside, the low of the 24th. But if they even get into the 67.90s, there is 68.21. Hey, that's not a big deal. It's only 30 cents. But if they get there, you've got to be a little bit careful because you've got a potential for a double top. Now, what's interesting is my monthly chart went to leg C. I've gone over and over and over. I have no other way to count. The leg C says in the ChapmanWave, you should get to a leg B. Now, before we get to the break, which is coming up momentarily, let me just run the numbers. The gold is down 10 at 16.59. I looked at my charts. I didn't have the courage to do it. I wanted to buy the DZZ for subscribers. And the reason being, the GLD made a peak D top 2 days, 3, 4, 5 days ago. And there was a chance it would test the 9-period exponential moving average of 160.50. 160.50. The SLV, the silver index, it made a peak E. And that says it could test the 200-period moving average of 29.39. It's at 29.71 right now, down 22 cents, and it made a high of 30.24. And that says 29.11 is a possibility to start filling the gap. But at the same time, the Euro, EUR, USD making a peak D. But all of these indexes are holding high with very good MACDs. I did not want to risk a pullback, getting into it, and then having a spike to the upside. I still see residual strength there, and I still see enough residual strength in the market to talk about. I'll be right back at 877-977.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, we're back. Dow's down 10, S&P's down 1, and we're going straight to Joe in Boston. Hi, Joe. How are you?
Good, Basil. How are you?
Very well, thank you.
Good. Hey, can you take a look at LinkedIn for me?
So have you done anything with it yet?
I just started a small position this morning.
And that's on the long side, right?
Right.
Okay. Folks, we're looking at LNKD. It's 107.86, up 35 cents. It's an IPO that came out back in, I remember this so well, it came out in May of last year. It opens at 82.50, goes to 122.70. This is the first month. 122.70, a low of $80, and that low of $80 was then broken to the downside when it went to 55.98 in November of 2011. Now it's had a powerful leg A up. My guess, and at this point it can only be a guess because we have to still consider an IPO, is that it will make at least a leg B to the upside. Now, I don't have a time on that, but so far it's holding the 9-period moving average really well. So I'm kind of positive on this on a monthly basis, only because what normally would happen when a stock has been this successful, coming off a low in a very steady way, then the high bar that it made after the IPO, which is at 122.70, that kind of becomes a target. But I only will consider it a target if this inverted Roman candle pattern of the month of May, if at 120.63, low of 91.82. Now, it closed at 96.10, and it opened at 108.81. That makes the candle. So if the wick the middle of the wick, if it at any point can get to 113 to 114, there's a really good chance that it's going to test the high of May, which is 120.63. And normally what would happen if it can get that far, it will go a little higher, then the target would be 122.70. That's the positive side. Continuing on the positive side, on the weekly chart, there's a kind of a flag pattern. I'm sure you noticed this. What happened was it went to 120.63 on the week of the 4th of May. It slipped, and then it had a low of 103, the same bar, and that was important. Why? Because 103 becomes your bellwether. It becomes the price that you look for, because between 103 and I see 200 there now. Let me just go through this again. That should be 103, right. So 103, all price activity underneath it makes that 103 level even more important. If you break and close above the 103 level, that's that round number that I was talking about, that becomes a positive. Well, it did that back in July of this year. Then it pulled back sharply, but made a higher low. Now what I'm calling this is, I sometimes talk about the rectangle that forms, whereby within the rectangle, as long as you come back as long as you don't break the low bar, which in this case is round number 88, the week of the 8th of June, you can start a move to the upside that quietly over a period of time in a shorter time frame, I'm using the monthly as the bigger one, as a shorter time frame for the weekly, can go to peak A, peak B, peak C, and even a leg D. And the rule in my CD introducing the ChapmanWave methodology says, if the technicals are confirming the rally, and so far they're not quite, but they're starting to, that would imply that it can go toward, at, or over the previous high of 120.63. That sounds very obvious, but it's saying that it'll make higher highs to that. Now, where does it break down? It breaks down if this week I see on Friday at 4 o'clock, if it closes under round number 104, which is our latest round number, that was this week. So your parameters are very clear. You've got the same pattern as an inside buy mode in the daily 107 and 107.05. You're in leg C with a very strong leg A. That's a kind of leg A failure.
Right. So on that weekly, right?
Yes.
If it goes to over that E at 120 before it goes to leg D, is that more bullish?
Yes. If it does it in leg C, absolutely.
Yeah, right.
Now what happens, I automatically, because the most recent low of 88 is way above the starting point of 55.98 back in the week of the 2nd of December,
right.
I automatically say F/C, meaning you could still be in the continuation of the buy mode that started way down. But that's only there is like a yellow flag to say, yeah, everything's great, but watch out, there is this little thing still sitting there, and that's that it could be a continuation pattern. I think you got a nice trade. What you want to see is a close today somewhere around 108.30 rather than 107.70, and then by about Friday afternoon, if you can get to 109.70, that's really good action.
And Google, can you take a look at Google after the break?
I will after the break, but I got to go. Thanks for calling,
bye.
Joe.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109.70. 109
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. I'm going straight to, we had requests in the den. I got a chunk of requests, almost a dozen requests to be in the den, and IMs and emails. So let's go. First one is CDF in the den, wants to know about FSLR. That's First Solar, I believe. Let me just go back here. That is... Yep, that's First Solar Inc., solar company, and it traded as high as 26.31 just yesterday. Its low, most recent low, was $11.43. Its high was back at a peak C minus at 317 round number. Folks, add this to your toolbox. I've been working so much at the round numbers. I've got a slew of different techniques that are based on the round numbers. So it goes there. I'm going to make that just a different color for fun. Here we go. Okay. So it goes to 317 round number high, all-time high, back in May of 2008. Plunges down to 85.28, rallies up to a doji high of 207.51 in May of 2009, a year later, 2 years later, and then it comes back down. And what does it do? It goes to $11.43 June of this year. Now it's having a counter-trend rally. Look at that huge volume going in there. Well, let's do an analysis of this real quick. I call this a lightning round. So we're going to go, I'm looking at it making a potential peak G-top here if it's touching the 9-period moving average at 24.01. If it closes in the next 2 days anywhere above the simple moving average of 23.01, 200-period simple moving, no, that's not a 200. It is. 14. Sorry, that is the 14-period exponential moving average. I was just going to say, that would be weird. Underneath $23 in the next 2 days, this thing is going to be pulling back. But the MACD and the stochastic, for the first time, this is the first time it's giving pretty good signs. My guess is if you're in it, I would have a stop on some of my position, depends when you got in, but I'd have a stop of some of my position if it closes under today's low of 24.01. But at the same time, it's just a small position. Keep your call, because I suspect from the way it's acting right now that it's going to slip under and close underneath the 24 level, and then it's going to have a bounce. When that bounce goes to 24.70 to 25.10, that's going to be key, because if the technicals are sliding, the MACD's at very good. It's tipping down, but it's still very good. Stochastic's at 90%. And that's the reason why I'm saying I would not get out of my full position. I would take a little profit maybe right now or just underneath today's low. I would be looking to get back if it holds nicely and then closes sharply above the 9-period exponential moving average. What I would do then, that's the scenario. My plan would be, it's made a second peak D in the 120-minute chart, 23.53, somewhere between 23.70 to 23.30. I would nibble. I put that position back on again. Now there's a good chance that it's got enough internal strength to at least attempt to have a high-level consolidation, because if it smashes through 22 anytime in the next 3 to 5 days, I mean, it just goes right through to 21.10, then I'm saying, okay, I need time. I need time to assess what's happening in the weekly chart. So far, the weekly chart's very good, and my suspicion is, based on the chart pattern, that yes, it could come down to the 22.5 to 21.5 area, hang around for a little bit, and then rebuild to try to make leg C up if it makes a peak B in the weekly. But the way the MACD is in the stochastic, in the weekly chart, says this is good action. The monthly chart says it's a horrible stock. I know that's a contradiction. It says it needs a tremendous amount of work. It has to close at least 3 months out of 4 about 30.50, the 9-period exponential moving average, to really be building upside strength. Want to be really positive. The reason why I say keep kind of a core position is that there's a chance, based on the technicals at this particular point, that if in the next 2 days, instead of breaking under 24, it just has an inside day tomorrow, 24.81, and it pushes above today's high of 25.79, it's going to make that leg D. Okay? Hope that helps you. This next one is LPX. What is LPX again? I did the chart. LPX making a peak D. It's a 13.30 down 14 cents. Louisiana Pacific. Now, Louisiana Pacific, is that paper, etc.? Let me just look it up real quickly. Maybe someone could just tell me quickly. Someone tell me. Louisiana Pacific is, I believe it's paper and wood materials like that, and it's trading at 13.30. Now this is very interesting. It's got peak D if it doesn't make a new high today in the daily, and the MACD and stochastic are tipping down, saying, you know what, I need a little bit of a breather. I need it like to make an oval. I'm even going to draw it in. We'll look at it again in about another 4 or 5 days, maybe Wednesday a week. We'll look at it again, or maybe Monday. I think it's making an oval consolidation pattern. Very strong leg D up in the weekly. I love this action. The on-balance volume says be a little careful. Yep, you could get a bit of a pullback into next week, but 12.16 is the major support in the 9-period moving average. It's stopping dead right at the 200-period moving average. It made a high of 29.57. This is that drop bucket double top pattern in the monthly at 29.75 in January of 2006. Plummets down to 1.03, $1. How many stocks have gone to single digits or the very low single digits and are now trading? This has been a major bull market, just a major bull market. And you just don't want to fight that major bull market trend, which is still intact. I mean, I'm talking about the market itself with 10% or something off the highs, all-time highs. So I have to look at it more favorably than even if on a short-term. I don't mind getting short in the short term if parameters are met. But look at this. Why would Louisiana be making a leg D up, touching the 200-period moving average, since it hasn't been there since October of 2007? Now, I don't know what your position is, But my position would be that be prepared that it could take a little while to consolidate. It could even, this could even come down to the 1260 to the 12 to the 9-period weekly moving average. I like this. I like this kind of action. So consolidation, I think it's making the ChapmanWave oval formation that says, you know what? Be careful. This could be the ChapmanWave stalk leg formation. So it takes another 5. It could take as much as another 5 to 7 or 8 sessions to consolidate, and then suddenly it makes this is the body, this is the leg, all the way from the big doji candle of 987 on the 31st of July, makes the oval formation, pulls back up and down, still an over, and then pow, it breaks above 1376, and that's the neck, and that's a breakout pattern, and then you got to deal with that in another way. So I like it. I think it's very good action. I actually think it's good market action. So those are the parameters I'm looking for. I don't know if you're in it. If you're not in it, I would wait until, you might miss out something. I would even say you could nibble on a small position at 1377, 1 penny above the high of yesterday with a tightish stop. I would prefer to have that as scenario B. Scenario A is to get it on a pullback just in the 1310 to 1290 area, and you can put in a 30-cent stop because it's a small position, and then tighten that stop if it moves back up. Okay, next thing we've got, and that was for Axman in the den. Marshall wants to know about DUG. DUG is fascinating. Doug is the ultra short oil and gas pro shares. It's got a nice little pattern here. It's made a trough E. It's a 21.74. It's up 17 cents. But this is very important. What I'm looking at here is that the low that was made at 21.02, then a rally to 22.17. That's a 5%. Yeah, less than about a 5% rally. It's had a pullback. But I want to look at DIG, which is far more impressive. Look at DIG. DIG is the pro shares ultra oil and gas ETF, and it's gone from a low of 34.07 in a price time match in a cup formation, and that price time match, I now have to move this out because it extended. Did it touch the left side high? 48.26 was the high back in May the 1st, and 47.76. It just missed it. So now it's attempting to make a handle formation, one of my least favorite formations, but it's a handle formation. The MACD and stochastic are pulling back the price, just like the S&P and the Dow. The price is holding quite well. If you had to ask me, is there a position I would take right now? I'd probably say I'd hold off unless DUG closes, unless DUG goes to 47.19, 1 penny above the high of the 27th. If it does that, there's a chance it's going to retest the high of 47.87 on the 21st. And then if it touches that, then 47.76 is the next level. Then you can expect some resistance. So what's the position? I don't know if you're long. I suspect if you're asking about Doug, you might be long. I'd be looking at the DIG, the inverse, the long side. And all I can say to you is, if you are long, I'd stay long as DUG doesn't take out today's high. If it takes out 46.75 intraday and it holds above that into the close, I would probably say I'd lighten up on the DUG because there could be a pop to the upside. If, on the other hand, DIG closes towards the low of the day, 46 is the low, if it either touches that or takes it out, stay in your DUG position. The price is the arbiter of direction in this case. If it takes out the low of today, good chance it's going to make a dreaded H and test 45.40. Okay, that's that. Now let me just check on the time. Time's doing well. Let me go to the next one. So I hope that helps you with the DIG. Now, how would the DIG break out? The DIG would break out if there's a powerful move that closes above 48.26. It's absolutely imperative in this pattern that it closes above 48.26, and the stochastic has to turn around to the upside and the MACD has to turn. So far, from the pattern I'm looking at, that on the daily is going to be tough to do. So I think we're in a little trading pattern here. The parameters I gave you are the parameters I'd be watching. But the weekly is in leg C with a wide doji. And that white doji candle says, even if you pull back to the 44.88 level, you should come back and test the body of the candle of last week between 47.24 and 46.58, and then continue your way down. If, on the other hand, this week or next week you close above 47.87, that's leg D, that's very positive action on DUG, because it's going to retest the 48.26 high of this past May. All right, so let's go to XOM. Big Bill in the Den wants, folks, the Den is such a great medium. You get these requests, you get these people talking about very important things. You got some folks that tell us about their trades. It's just really just a wonderful medium, and you can see the charts even during the breaks, the commercial breaks that you don't see on Tiger TV. They're watching me notate all the different charts that I'm looking at. XOM, ExxonMobil. Now this is a fascinating chart. It's a very unusual chart. ExxonMobil made a doji high back in October of 2007 at 95.27. It hung around at the top. It pulled back to 77.55 in January of 08. But then it went back to retest the high and it made a nominal new high. What was the nominal new high? 96.12. That 96.12 level of May of 2008 was the high. There was a huge decline in October of 2008 to 56.51. That's a 40 point. That's a 40 point decline. It's like a 45%. Yeah, that's a 40 point decline. It's huge. So it's about a 43%. Is that right? Then it goes all the way back down to 55.94. Now look what happens. It goes peak A, peak B, and peak B is at 88.13. It pulls back, starts a trend line with rising lows. That's the low of August of 2011 at 67.03, 67.93, then 69.21. Now what's important is that it's making slightly higher highs. Let me double check. 87.94, and the recent high was 88.91. So it's making two arch formations. My rule of thumb is if the first arch formation of 88 round number, then 88.13 the following month, that's April and May. If it gets taken out and Mobile closes, it has to close in the 89s, especially this month, in the next few days, if it's able to do that, or maybe early next week, that's going to be very positive because the technicals are very strong. So as a dividend stock, as a capital increase stock, I love this action. The weekly is very strong. I'm going to make a recommendation here, even though the stochastic and the MACD on the daily are kind of failing right now. I'm going to say 87. I just need to do this 87.83. So that is then leg E and leg F. I believe that's correct. Then a down candle. And now this is A right there. I'm going to make a suggestion. If the question was, what do I do? Hold it. Start to take a little bit off if it closes under, not 87, that was 86.93 was the low of the 24th. If it closes under 80, if it closes under 86.50, just take a little bit off because it's just saying, hey, big rectangle formation could form in the weekly. But my recommendation here is to start a small position right at 88.10. You can have a stop because it's a small position at 87.42. That was the low of yesterday. The reason being, if it takes out yesterday's high of 88.40, that's very nice action and retest the previous high. I'll be back. Basil Chapman, 87.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, and okay, so we've got very limited time. This is going to definitely be a lightning round. So, because I want to talk about the RTH, the retail holders. So I'm going to go into that. So let's just run through the ones that are remaining. So, question on Apple. Apple has made just a very near-term top at peak E. It's holding very well with doji candles. The MACD is good. The stochastic is good. September, the 12th or something, or the news comes out, whatever it is. That's a long time to go. All I'm thinking here is that Apple's got a trading range between 680.87 was the high. I think it goes to slightly higher highs. I suspect it's going to go to somewhere between 683 to 686, just the near term, and then trade down maybe to 663, the 9-period moving average. Make kind of a consolidation here, getting ready for a spring to the upside or the downside. My guess is that when the time comes, Apple is actually going to pull back on the earnings news, but that's just a guess. So that's that. My parameters would be on a very short-term basis. Apple is making an F/C in the 120-minute chart. It needs to clear 680.87 and needs to do it by later this afternoon or this morning, or it started its consolidation. That consolidation will go through until Friday afternoon, and then we should see what's happening on a weekly basis. With the weekly strong, monthly is very powerful. It's still a fantastic stock. I am expecting some kind of a pullback at earnings news. Then we've got to go to eBay, and then let's see, I don't want to run out of time. eBay is acting really well. It made a peak D. Look how many times we're looking at these peak Ds. It's very significant. So peak D doji inverted. That's an evening star. It makes a 48.08 high. Round, it closes at 47 round number. 47 is the clue. Today it's above that. It's at 47.62. If eBay starts to drop and close underneath 46.50, watch 47. If it closes above 47 again, it's going to try to make a new high, but it's making a doji candle, leg F. I'm calling it F for now in the weekly. Monthly is in F as well, but everything about it is still very strong. I like eBay. It's just, I think a sideways consolidation would be just what the doctor ordered. Let me see. So those are parameters to watch. A close above 48.08 is positive. I suspect 49.30 to 51.20 could be the upside there. On the downside, a close below 46. I think I said 46.50, and then you got to watch out because it can go down to the 45s, and that should be very good support unless the whole market tanks. Now, TJX was a quick question. TJX, let me see if I can have notation. Yeah, this is A, B. I'm changing that. It's going to call it A, B, C. This is leg D in the daily, extending leg D up in, no, it's leg E in the weekly, acting very well. Walk in the 9 period moving averages at 46.42 TJX. If it closes under 40, it's at 46.42. If it closes at 44.50, closes on a weekly basis, then it's starting to make some kind of a short-term top. So far, still looking very good. Now, I want to talk about the RTH. We had, in my opening call, we had a short position at 43.22. Is that correct? 43.22. But it's just walking the 9 period exponential moving average. I made the stop 44.22. We got taken out today. The high so far is 44.25. I don't mind because I've got this as G/C with the potential to go to leg D, but it's in the up channel resistance. That's the more it can stay up in the resistance area without starting to make lower highs. I don't know if I have the time now. You see the Dow was making lower highs. It didn't get up to the up channel. That's a big clue that it's losing upside momentum. This is not. So this is still very good. So I like RTH as it stands right now, but I'm starting to get divergences. By the end of next week, not this Friday, I suspect by the coming Friday, I'm going to be watching this really closely. Quickly, as I go out here, the levels to watch on the Dow in the next day or two, it's at 30,100. A close below 12,900 says short-term top unfolding. A close above 13,250 says great action, could retest the 13,300. Thanks for being here, folks. I'll be back on Friday. Stay tuned for the show.